Hey guys, what is going on? Welcome into the video. So in this video, I'm going to be going over my next big trade. This is the highest conviction trade that I've had in a while. I do plan on making this my biggest position in the short term and just going through my full thesis on the trade, what the company is, what's my play on it. It's actually an earnings play, so I'll be going through what I expect from earnings and everything like that. So without further ado, let's go ahead and get into this stock. Alright, so this is probably going to surprise a lot of people, but my next big trade is with Bed Bath & Beyond. Now this trade is not a technical play for me, but one setup that it does have going for it is the fact that it's forming a bull flag. So it's holding support at 18 with that downtrending trend line. When and if we do get that breakout, I think we see the big breakout happen. Now bull flags do not always play out, but it is a pretty strong setup if the stock is going to break out and have a quick run. But first of all, we can take a look at the stock price. So as of right now, we can see that this stock is trading for $18.77. So it had the big pop. It broke out of that $15 resistance line last earnings, so it went from $15 all the way past 20, actually hit 25 after they blew out earnings estimates last quarter. So after it hit its high of $25, it has trended down. As of right now, it's sitting at $18.77. And right now, it does have pretty strong support at $18. But like I was saying, it's not any big technical play. So let's go ahead and get into my thesis on this trade. So Bed Bath & Beyond is definitely looked at as more of a boring company. It's looked at as a brick and mortar retailer, and it's looked at as like a company that's going to be taken over by Amazon. But I do think that people are overlooking a big change that happened with this company, which was a change with management. So this company has entirely rebuilt a new executive team, and they do have a new strategy behind the growth of this company. And as you can see, this shows the percent of customers who abandoned the homepage. This is before new management took over. 44% was the average of market, and Bed Bath & Beyond's average of people leaving the homepage was 55%, which is terrible. So what they've done is changed their technology approach entirely, made it super customer friendly, changed reviews all the way, and a huge decrease in customers who are abandoning the homepage. And what they've done is they've changed their advertising approach from having hundreds of different options and so many options for these customers to choose from that it's too tough. They've narrowed this down to customer inspired rooms, making it a lot easier for customers to go through the website and for the company to get sales. They've also redesigned their mobile apps and everything having to do with that, with the Bed Bath & Beyond brand and BBBY Baby brand. And the new management has put together specific targets, the ages that they're targeting, and what they're trying to sell these people, just giving this business a further led customer-based approach. And as we can see, what the new management has been able to achieve is they turned the comparable sales positive in quarter two, which is absolutely massive, game changing for the company, and also went from a net debt position of $500 million to a net cash surplus position of $300 million, which is also very healthy for the company overall. And also what this new management has done is they've closed up a bunch of brick and mortar stores, and they've shifted a lot of the focus to online sales, which is obviously a big part of future business and where they plan to achieve the most revenue overall. So obviously a lot of these changes were seen in last quarter's earnings, resulting in that stock price going from $15 all the way up to $25 this quarter. Now it has trended down to $18. So is it fully priced in yet, what they've done last quarter? Potentially, just because the market has realized what the company has done and everything having to do with that. But my thesis on this trade is that the earnings this quarter, which the earnings are on January 7th, I believe that the earnings will be blowout. I believe that they will raise guidance from the holiday sales. The holiday sales, in my opinion, will be massive. There's been so many people talking about home goods, candles. There's also potentially going to be a baby boom stemming from the pandemic. People staying at home, we know what a lot of people are doing there. There's not a lot to do. Alright, so anyways, one of their brands is from BBBY Baby. So BBBY Baby is one of the leaders in baby goods sales and everything like that, and I'll show some data on search traffic in just a second. But also, I believe that one of the most popular gifts this Christmas were home goods, candle sales, everything like that. As we know, Bed Bath & Beyond's biggest products, the biggest products are candles, home goods, decorations. So let's go ahead and take a look at some Google Trends and some search traffic data, which leads me to believe that their earnings will be blowout this quarter. So first off, we can take a look at some baby data. We can see we did get that initial pop during the pandemic, but as we can see, this raise in search traffic data has pretty much sustained from people searching it throughout this year. So more baby sales, of course, also baby gifts for the Christmas season. We can see that we did get a pop, and it is slightly higher than past pops. And also we can take a look at candles. Over the past 5 years, it did hit the highest high that it's hit yet. The same thing goes with home gifts. Home gifts is sitting at the highest level that it has in the past 5 years by far. Also Bed Bath & Beyond search traffic, that it is pretty much sitting at highs as well. And then also the search of Bed Bath & Beyond near me. This is also projected to be sitting at highs. So what this company has going for it is the new management. All the search traffic data should be leading to some amazing holiday sales, a blowout quarter in my opinion. But my favorite thing having to do with this trade is the short float. So the float of this stock is over 61% shorted, which is absolutely insane. And also the shares float is 118 out of 124 million available to the public. So we can take 61% of this 118 million shares of the share float. And the number we get from that is there's about 72 million shares that are shorted overall in this stock. If this stock gets any small movement up, if earnings impress at all, this stock is absolutely going to take off. These shorts are going to be forced to cover with any small move up. If we get a 5% pop, I believe that this will start the short squeeze. As more shorts start covering, other shorts will start covering as well, and that just sends the stock up. The stock could absolutely go nuts if all these shorts start to cover. And if we do get the impressive earnings like I do expect, that would result in a major short squeeze. We could see $30 plus. Now my personal price target initially is hitting that $25 mark, which was the recent highs this year. So if the stock gets any kind of uptrend going, if they beat earnings, I do believe that we will see $25, those recent highs. I do think the stock will go back to that level. And if we break above that, the sky is the limit. We could see 30, 35, 40. Now that's of course asking for a lot, as that would be like almost a 2x. So my plan on this stock is loading up on late January, early February calls, and also shares. So I usually do not like holding call options through earnings just because the implied volatility gets so high. After earnings, the IV drops, and the option premiums drop with that as well. So for that reason, I do plan on getting the later January, early February calls, having it about a month out past earnings just to be safe. If you do have that call option that expires right after earnings, if anything bad happens as earnings, if the stock drops at all, those options are going to expire worthless and lose a ton of that IV, and it's just not going to be good. So to be safe, my plan is to leverage my money, still get an option, but those are going to be later January, early February calls. And also a pretty good size position with shares, just to diversify within this stock. And overall, I do plan on making this stock the biggest position in my portfolio in the short term, and I am planning to hold this trade for a month or two, depending on the price action, depending on how earnings go. And I do think Bed Bath & Beyond, ticker symbol BBBY, is due for a huge move soon. It's also trading for a reasonable valuation. It's not one of these stocks that are trading at an astronomical PE. It does have very healthy revenue. They do have more cash than debt and everything like that. So this is not a super risky trade, even though it is always risky to hold through earnings. I do believe that the reward to risk ratio is so much in the long's favor compared to the shorts. I do think we get the short squeeze and see a big move coming soon for BBBY. So let me know your thoughts on the trade down below. If you're interested in joining the private stock group, that link should be the first link in the description. Every time I buy and sell a stock, I alert the group, I send out a nightly watch list, and also answer any questions you have. Also, if you want to get 4 free stocks in Webull, $5 free in Ackman investing, or $10 free worth of Bitcoin, those links are down below as well. Those are affiliate links, so it does help support the channel, and I would greatly appreciate that. And thanks for watching, guys. Let's get rich.